Welcome to episode number 5 of Michael on the Mic. We have a lot to go over in today's video, from cities in the US officially banning new gas stations from ever popping up again, to EV box charging station companies, to Zoom, some crypto news, and a couple of other pieces of information. And before we get into that, though, I want to quickly remind you guys that if you don't want to watch the full episodes, they're about 30 minutes to an hour. I usually try and keep them around there. If you don't want to watch those, I'll put a link to our Clips channel. I post clips about a day or two later, and they're about 2 or 3 minutes that cover each of the topics I talk about in this video. So if you don't like sitting through the whole episode, you can make sure to check out and subscribe to our Clips channel to just get the highlights of everything going on in this. But anyways, so I read up another day how, and this was really surprising, California City became the first in the U.S. to ban new gas stations from popping up. And this is a huge move in the right direction for green energy, renewable resources, and electric vehicles especially. I didn't think we would see this anytime soon, and a lot of people thought we were still a couple years out from seeing any major moves like this. But a city called, I'll probably say it wrong, but let me know in the comments, Petaluma, California. They have 61,000 residents. It's 15 square miles in size, and it is the first city in the entire country to permanently halt the construction of new gas stations ever. And the legislation also outlaws new pumps at existing gas stations to be added, and it streamlines the process for adding electric vehicle infrastructure such as charging stations, hydrogen fuel cell facilities, and other things to just promote people to start pushing for electric vehicles. They said it's part of the city's plan to completely phase out carbon emissions by 2030, and I found this really surprising. I didn't think we would see this for a couple more years to come, but this is definitely going to benefit a lot of different stocks, a lot of different companies, especially electric vehicle companies and charging station companies in particular. But while this move is taking place in like a very small city, and it's only a city of 61,000 residents, there are other developments happening at the state of California level. Last year, the state banned the sale of new gas-powered cars by 2035, and they'll require about 75% of heavy trucks sold locally to be electric by that date. So it's not just small cities. We're starting to see states and the government pass legislation to really push for electric vehicles, zero carbon emissions. We're seeing the government push more towards electric school buses, electric vans. We're seeing states do the same thing, and this is a really good sign for electric vehicle stocks, the environment in general, and just making a push towards greener and more sustainable energy. But speaking of companies that are going to benefit tremendously from this push into electric vehicle and banning gas stations, is going to be a company called EV Box. So EV Box is the largest electric vehicle charging station company in Europe. They're planning on moving to the US. They already have plans of doing so, but currently they have about 200,000 charging ports installed. They're in about 70 countries worldwide, and they also have 5,000 plus fast charging stations globally. There's other companies such as EVgo, which is just strictly a fast charging station company, but EV Box is by far the biggest, and in my opinion, they have the best valuation in terms of what they already are doing. They have about a 45% market share in Europe and in the whole entire Europe, and they're generating about $100 million in revenue as of 2020. This year, they're planning on increasing that, and they do have pretty high projections for 2021, but they're much further ahead than all the other companies right now. Like EVgo, they have about 800 or 900 fast charging stations, and EV Box, they have 200,000 charging ports and 5,000 fast charging stations. So they're very far ahead of them. Currently, the stock ticker symbol is TPGY. EV Box is going public via a SPAC merger, and a couple things to keep in mind is that right now at a $25 per share price, it's around $3 billion market cap, and that's pretty important. That's that's a pretty good value for companies in this space right now. If you're looking at Blink Charging or Switchback Energy, these companies have significantly higher valuations in terms of their revenue and the numbers they're currently doing. But EV Box, they already have significant portion of revenue. A lot of this in the future is going to be coming from their software business, which is going to be huge. They plan to develop mobile software to accompany their products, and they estimate that this will help increase their margins, not only increase the revenue, but help increase their margins down the road. They currently have software, including their Everon EV charging app, which allows users to find and pay for nearby charging stations. But either way, EVBox is making major partnerships with parking space companies. They're the largest in Europe by far. They're looking to expand into the US, and they also have this charging EV charging station app that allows people to pay and find charging stations. So at a $3 billion valuation with around $100 million in revenue, they're in a rapidly growing industry. I own the stock. I personally think it has a lot of potential. It is high risk, high reward, but if you think they're going to be more electric vehicles, there's going to have to be more charging stations, and this is the clear leader by far. I think they probably have the most electric charging ports out of all the countries in the world. This company, I think they have more than any other company around the world. They have 200,000 plus charging ports, and all the other companies, at least I've done research into, have significantly less than that. But now on to the topic of, saving energy and the electric grid. A company that I am heavily invested in, I really like, I've spoken a lot about on our main channel, is a company called STEM Inc. They are merging with Star Peak Energy Transition Corp, stock ticker symbol STPK. And they just announced on March 2nd, 2021, that the installation of its largest Massachusetts solar plus storage site is installed, and that will participate in New England wholesale energy markets through its existing partnership with Kearsarge Energy LP. So essentially what this is the project is the largest of its kind that STEM is they are a company, an AI company that is working on transitioning between using grid energy, battery energy, solar powered energy, and essentially they have this technology called Athena technology, which is AI powered analytics platform, and it enables their customers to optimize their energy use, save them money, switch between using grid power, battery power, solar power, and if you're thinking there's going to be alternative energy sources in the future, such as solar or wind or any type of alternative power, well, STEM is the way to go. Stock ticker symbol STPK. They're the largest by far in this space. But with this partnership with Kearsarge Energy, this project is the largest of its kind that STEM's Athena Smart Energy Storage software currently operates for Kearsarge in Massachusetts. I'm probably saying that wrong, and you guys will let me know in the comments, but let me know. And with this, they're also going to work on 2 other projects in towns in Franklin and another town in Massachusetts. And together, all 3 projects they're working on with Kearsarge are going to be generating $6 million in energy storage system projects. So it's a pretty big deal for them. Right now, STEM Inc. and stock ticker symbol STPK has a valuation of around $4 billion, and they're projecting revenue in the next 5 years by 2025 to hit $1 billion in revenue. Currently, this year, they're projecting around $100 million in revenue, but either way, they are the largest in this space right now, and this is just another big partnership. We haven't heard news on them in a while, but this is, pretty exciting. Let me know what you guys think of STPK, what you think of Star Peak and STEM Inc., their merger, and this new front of the meter wholesale market participation services with Kearsarge Energy. Next up, one thing that could have been prevented with STEM Inc., thing that could have really helped out a lot, was with what happened in Texas. So we all remember a couple, early in this year, there was a cold front that went all across Texas, and Texas electricity firm, a lot of them had to file for bankruptcy, citing $1.8 billion in claims from the grid operator. So Texas, their largest and oldest electric power cooperative, they filed for bankruptcy because citing a disputed $1.8 billion bill from the state's grid operator. The company is called Brazos Electric Power Cooperative, and they're one of dozens that were in a lot of trouble, that owed a lot of money because of everything that happened in Texas. Tens of thousands, hundreds of thousands of houses were left without heat or light for days. It says 4.3 million people, actually. There were bursting water pipes, damaged homes, damaged businesses, and the state's grid operator, Electric Reliability Council of Texas, they were charging, these power companies a lot of money. And some cities, even like the city of Denton in North Texas, they sued the state's grid operator and to prevent it from charging them for unpaid fees. And this was just a whole big mess. It says that the grid operator in Texas, at one point when everything was freezing, people were losing power, they charged $9,000 per megawatt hour over more than 4 days. And that's over 500 times the usual rate for their services. So things were not going well, but with STEM Inc., a stock we spoke about earlier in the video, their technology, their AI technology to transition between grid power, solar power, and wind energy, a lot of this could have been at least not as bad. It might have not been solved completely, but it could have been a lot better if they had that in place. So Brazos, they provide electricity to more than 660,000 customers across the state of Texas. Now, they did have to file for bankruptcy, so we'll have to see what happens there. Another company in the energy space, saving energy, though, is Lime. And Lime, they're spending $50 million to expand their e-bikes into 25 more cities worldwide. Specifically, they're going to be looking to focus on the U.S., Europe, Australia, and New Zealand. They said those are the markets that they're particularly focusing on, and they said that they also have a new e-bike model, and this model provides an extra boost for tough hills. It has a phone holder. What else does it have? Phone holder for navigation and swappable batteries compatible with their Gen 4 e-scooter. So they are trying to expand into more countries. They're saying how, micro-mobility using scooters, electric bicycles, and other sorts of micro-mobility services is going to continue to grow, especially as countries and states continue to open back up. Things start to return to normal because people are going to use these to go to work. They're cheaper alternatives, maybe than taking, let's say, an Uber. And maybe if people don't want to go in cars with strangers, let's say take an Uber, they could also use like an electric bike or electric scooter. Lime says that more than 3 million people rode on its e-bikes last year during the pandemic, and they expect this number to increase dramatically as people get vaccinated and people return to work, social activities, and just get out more. So it's pretty interesting that they're spending that much money. That is a pretty significant amount. I don't know what Lime's valuation is. I do believe they are a private company, but it's cool to see how they are expanding into more cities around the world. Let me know if you guys see Limes. Outside where I am, I always see like Limes, like Lime electric scooters. I see Bird electric scooters. I see what other? There's like 5 or 6 that I've seen before. 5 or 6 different brands, but really I remember Bird and Lime. So let me know which ones you guys have near you. Another story is with Apple. This is pretty exciting. Apple, they're reopening all of their stores in the U.S. for the first time since the pandemic began. And I've been waiting for this. I've been looking to get a couple new computers, a new Mac, a new laptop, and I don't like buying them without going in the store, especially when I'm going to be spending a lot of money. I like to actually look at the different models. I know you can compare them online at Apple, but either way, now Apple said all of its 270 retail stores in the U.S. are open for business. They said this was the first time that this has happened since early 2020 when the pandemic was first starting and they were forced to shut everything down. So this doesn't seem like a big deal, but I'm pretty excited about it. I do want to get in there, get some new computers, a couple new computers, a laptop, and some other things as well. They said they started closing stores on March 13th of 2020, so it is right now just around a year that they have been closed and all online, but it is nice that they will be opening back up. Small little thing, but we are starting to return to normal with a lot of these businesses and just day-to-day life. But with regards to Apple, they also have another rumor that has been circulating, and that's with a folding iPhone that could be coming in 2023. So rumors about a folding iPhone are not new. Like, we always hear about, either a folding iPhone or like a clear iPhone, just like a glass one. But an analyst named Ming-Chi Kuo, I probably am saying that wrong, but he has a very strong track record, and he says that Apple could be looking at a 2023 launch of a folding iPhone that would have a screen of about 7.5 and 8 inches. And previous rumors suggested that the screen would be smaller, closer to the size of an iPhone 12 Pro Max, but they said that this is going to be around 7.5 and 8 inches. There have been multiple rumors before of prototypes of Apple having a folding phone, but we just have to remember that these are only rumors. I wouldn't sit around and wait for this, but it is exciting to see that a top analyst who has a strong track record is saying that we can expect it in 2023. This will obviously hinge on them being able to figure out how to mass produce and get rid of any of the key issues with folding phones, making sure the technology is right. But if Apple can do it, this will be exciting. I think, lately they've just been adding smaller phones, bigger cameras. You haven't really seen many changes to the iPhone. Other companies have come out with folding phones, so this wouldn't be like a completely new or revolutionary design. But it's time for Apple to really start doing something completely different. And all they do lately is better cameras, more cameras, thinner screens, longer battery. Like, they haven't made major changes or major innovations in a while. So this at least would be like a good step for them, even though obviously there are other foldable phones out there. So we'll wait and see what happens. But it is reported for 2023. Now on to the cryptocurrency Bitcoin news of the day. This is the exciting stuff. And the news is with Google Finance. I found this really exciting, but Google Finance, they added a crypto data tab to the Google Finance section. And right now, this signals that like Bitcoin and cryptocurrency is really going mainstream. We already know that. Banks are starting to invest heavily into it. We saw Square put $170 million into it. I did a video on that a couple days ago. But right now, when you go to Google Finance, I look at this a lot, especially when I'm doing my videos. But now the top part of the screen, you can see it says US, Europe, Asia, currencies, and crypto. And when you click on crypto, they have 4 different cryptocurrencies listed. They have Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. And if you click on one, it looks just like a stock chart would look for Google Finance. So it's nice to see that they are adding these features to the platform. It makes it a lot easier. You don't have to go. You don't have to go to like a different site to look for them. You can just look for everything on Google. However, unfortunately, if you look for Cardano or Polkadot or Stellar or Ripple or any other cryptocurrency right now, they don't come up. You cannot find them on Google Finance. I'm sure they'll add them over time, but at the moment, you can't find them. They just have the 4 main ones: Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. But either way, pretty excited about that. I know it's not a big deal, but it was an exciting thing that I just found out. Something related to cryptocurrency as well as with NFTs. So we've been seeing a lot about NFTs in the news lately. And an artist named Grimes just sold $6 million worth of digital art as NFTs in one single day. And she's the latest artist to get on this NFT, trend. You could call it a trend, you could call it a gold rush, whatever you want to call it, but there is a big trend right now of seeing influencers, celebrities use NFTs to generate a significant amount of cash in a very short period of time. So she sold a series of 10 different pieces. Some were one of a kind, some had thousands of copies, and they went off for sale on Nifty Gateway on February 28th, 2021. The highest selling price was a one-of-a-kind video called Death of the Old. Basically, whoever bought that owns the rights to that video, and the winning bidder took it for nearly $389,000, but the bulk of her sales came from 2 pieces with thousands of copies available that sold for $7,500 each, and the titles were called like Earth and Mars. So around $6 million total. And for those of you who don't know, I'm not an expert in this, but NFTs stand for non-fungible tokens, and they allow buyers to purchase ownership of a digital good, like an image, an animation, a video, or something that is like online, and they get to store it in the form of a unique digital token living on the blockchain. So they can't be duplicated, they can't be replicated. They're not like buying, let's say, a sports card or what else, or like buying a piece of art, because you can't like display them in your home. But you still have them, you still own them, you still have bragging rights to actually owning a piece of art like this. And over time, there'll probably be new ways that people can display them. I don't know what it will be yet, but right now it's like digital art, but you can't really display it anywhere right now. There's a lot of hype around it. I think we're going to continue to see people make tens of millions of dollars, especially if we see some big names come out with it soon, which I definitely think we will. In addition to that, with these, right now, when you buy and sell them, it's like with art or let's say with cards, they do have resale marketplaces for them. So a couple marketplaces have popped up where you're able to resell them for theoretically a lot more than what you bought them for, especially with like Grimes. If you have a one-of-a-kind piece, or even if it's a limited quantity, you could resell them for a lot more. It's just like, supply and demand. People want something. If there's limited supply, the price is going to go up. So there are marketplaces to buy and sell these. And speaking of marketplaces, Nike's North American head, Ann Herbert, had to resign. Didn't have to, but it was reported that she resigned after there were reported ties to a sneaker resale business. And what happened is Nike said the other day that their vice president and general manager of its North American division, Ann Herbert, had officially resigned, stepped down from Nike after being there for more than 25 years. The company is going to be announcing a new person soon, but this development came after there was a Bloomberg Businessweek article about Ann's 19-year-old son named Joe, and the report spoke about how he spent $100,000 on a credit card tied to her name for his resale sneaker business called West Coast Streetwear. And essentially he had been buying limited edition sneakers, flipping them for a profit. And we all know with resale sites like GOAT or StockX, you can buy and sell sneakers for a profit. It's a very lucrative business. And a lot of people were speculating that he could get them for much better prices, steeper discounts than most people were able to get because of his mom's position at Nike. However, they came out and said that Joe, the son, came out and said that he's never received inside information or discount codes or anything related to his business from his mom, but simply because she is so high up, he had used a credit card like with her name attached to it. It doesn't look good at all for her, and they said that she resigned. She wasn't, fired, but they said that she did resign. But obviously, it seems like she was like not able to stay. Like they were pretty much forcing her to resign. She had been there since 1995. She just got this position, I believe, last year as the general manager and vice president of North American division of Nike. So it seems just, obviously she resigned because of what happened with her son. Interesting to see what that conversation is between her and her son. But now back onto a couple of pieces of stock information. Then we have two more stocks we're going to go over after this. So the first is with NIO. NIO, they just announced their fourth quarter numbers and 2020, the whole year results as well. And they posted a bigger than expected loss and slowing EV sales in the first quarter. So NIO, they make the ES8 and ES6 electric sport utility vehicles, and they expect to deliver between 20,000 and 25,000 vehicles in the first quarter of 2021. So that's 15 to 18% up from the fourth quarter in 2020. However, this is a much slower growth rate than what they had seen all of last year. So 42%, it was expected that there would be 42% growth. Between the third and fourth quarter of 2020, there was a 42% growth rate. However, now they're only projecting a 15 to 18% growth rate. So it seems like they're growing at almost like half the rate of what they did previously. And this isn't good when you're a $65 billion company. Right now, NIO is a $68 billion company. The stock price is down around 13% on this day. When I was filming this video, it's down, all-time highs were around $65 a share. Now it's at $43 a share. But when you're a $65 billion company and generate only about $1 billion in sales, you have to make sure you're continuing to grow at a very, very rapid rate. So the company, they said they delivered 7,225 vehicles in January of 2021, and then their sales declined significantly to 5,578 vehicles in February. So they went from 7,200 to 5,500. Pretty big decrease, and that is not what investors want to see right now. They contributed this to flare-ups in the virus all around the world, some issues at the factory, but either way, investors don't care. If you're investing in a company that has a very high multiple, you need to see those consistent growth numbers, and you definitely don't want to see 1 month selling 2,000 vehicles less than the previous month, especially when you're only selling like 7,200 vehicles a month. So they said the first half of the year, they're giving pretty conservative numbers in terms of their guidance, but they expect demand to pick up in the second half of 2021. They expect to be back on track. I don't think they'll have much of an issue just because they are a Chinese-based company. They have a lot of good programs, such as their battery as a service model, where people can buy the vehicles without the battery and pay a subscription. So I don't think they have a lot to worry about long term, but short term, this did cause a lot of investors to worry. It could just be a great time to get into the stock now. It was at a price of around $65 a share. Now it's all the way down to the mid 40s. So if you're looking at this as a five-year investment, I don't think you could go wrong with investing in NIO. It's a Chinese-based company that's going to get a lot of support from the Chinese government to make sure it succeeds. Like, they're not going to let this company fail. And they have cars that people actually really, really like. And they really are like the second biggest electric vehicle company, like behind Tesla. They are really far behind Tesla. But in terms of delivery numbers, they did deliver over 40,000 vehicles last year. So, they are a pretty substantial company. And speaking of NIO, another development that is going to push the stock price up, especially in the next quarter. Well, there's some music there. But especially in the next couple of quarters in the next year, is that NIO is going to begin exporting their vehicles to Europe in the second half of 2021. So according to CNEV Post, the CEO of NIO, William Lee, he said at a web conference that NIO will be exporting to Europe in the second half of 2021. He goes on to talk about how the European market will be a very easy transition for them. They said the regulations are very similar in Europe as they are in China, so that's not going to be very hard for them to do. And they go on to explain how electric vehicle sales have risen very quickly in Europe. They want to get in the market there before it really starts to grow. In Norway, EVs accounted for over 50% of total vehicle sales. In Europe, it's growing very quickly. There's a lot of regulations in place, so they want to make sure they get in on that early. They want to make sure they have like a first mover advantage in the European market, because other companies, their competitors like Xpeng already began exporting vehicles to Norway in December of 2020. They did a very small batch of only 200 electric vehicles to Norway, but they've already started to get that brand awareness in Europe, and NIO needs to do the same thing. So this is a good move by them. Now for the last two stories of the day of this video is going to be with Paysafe. So Paysafe is officially using Snowflake, their software, to power cloud-based approach to data and analytics. And this made a lot of people exciting. Like, Snowflake is a major name, especially in the investing community for 2021. It had its IPO. It did extremely well. Paysafe, they are merging. They are going to be merging and going public later this year. So both pretty big names. Paysafe, for those of you who don't know, it's a payment processing payments platform that processes the gaming dollar volume for companies like for online games like Twitch and Fortnite. It also processes all of the dollar spent on like DraftKings, Bet365, William Hill. So if you believe in sports betting or you believe in online gaming, you think those industries are going to grow, well, Paysafe, stock ticker symbol BFT, is like the company behind all of those companies. So if those companies are growing, sports betting and online gaming are growing, well, then Paysafe is going to grow as well, because they're the company that processes all of the money spent on those platforms. But anyways, with regards to Snowflake, they're officially entered a partnership, and Paysafe is going to be leveraging the technology from Snowflake to achieve meaningful data insights and deliver more informed and enhanced customer experiences by tapping into AI and machine learning data models. So according to the CIO, Chief Information Officer at Paysafe, he explained how the data which is available to the company, to Paysafe, as a payments processing platform has grown increasingly rich. And he says when it's managed correctly and they use that data wisely and efficiently, well, then that enhances how much money they can generate, their decision-making processes. And they said Snowflake, being a leading player in this space, in the data analytics space, is going to play a fundamental role in harnessing the benefits of data analytics, AI, and machine learning. So they said this is going to be crucial for them moving forward. We all know all of the companies in the world rely on data and analytics. You know, that's how you target customers. That's how you make decisions. And being able to use Snowflake, which is the leading company in this space, it's just a pretty good partnership for them. Paysafe, not only do they do process payments, but they also have digital wallets with their service called Skrill. So this is just going to help them overall with all aspects of their business. It is a good partnership, in my opinion, especially for improving their approach to data and improving how they make decisions and what they do on a day-to-day basis. And finally, last story is with Zoom. Zoom has been, like a year and a half ago, very few people knew about it. Now everyone knows what Zoom is, especially with the pandemic. And the company reported much stronger than expected earnings, and they issued very strong guidance as well. So their revenue was at $882 million versus an expected $811 million. They were about 9 to 10% higher than what was expected. Revenue grew almost 370% year over year, which makes sense. Last year this time, people were just starting to go into lockdown for the pandemic, so makes sense. And they also increased their gross margin. One thing that was surprising, though, with their earnings call was that the company lost fewer customers than expected. Once things start opening up, the company was expecting to have a very high churn rate, lose a lot of customers because people could travel more rather than always do online conference calls. People could do a lot of this stuff in person. So even though things aren't completely open, they're not nearly as many restrictions as before. But they said either way, a lot more customers are continuing to use their platform than they had expected. They said right now they have 467,100 customers with more than 10 employees. So they have a lot of businesses on their platform. That is a portion of their business that has grown over 470% year over year. And they said that with all of this cash on hand, they're doing much better than expected. They have, projecting pretty high rates of growth for next year, even though things are going to be opening up. They don't think people are going to be going traveling still as much in person. They said with all this extra capital, they are open to buying new companies, some acquisitions. They said they haven't found the right fit yet, but they are on the lookout. So it's exciting to see that. Zoom stock has done extremely well over the last year and a half. It's going to continue to do well, I think, and they are expecting at least another, for the next year, 42% year-over-year revenue growth, which is still pretty big. So, anyways, that's all the news I got for you guys today between California, one of the cities banning new gas stations from popping up, to what was going on with NIO, Bitcoin news, NFTs, and everything else. If you made it this far in the video, comment down below a light bulb. We talked a lot about energy today, so just comment down below an emoji, that light bulb emoji. But I hope you guys enjoyed today's episode. Don't forget to get your 4 free stocks, each valued up to $1,600, when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.